All right, good morning, everybody. It's QRA day. We'll get that data out at 8:30. It's very likely that this is part of what the market's been waiting on this week. It's hard not to imagine that they're also focused on the four really big hyperscalers that we have reporting also. I was looking over the Treasury announcement. There are some changes, but nothing really stood out. We got to get the final outcome and then we'll see what we're going to do from there. The AM edition of the Founders Note just came out, so you'll have a chance to read it before I do. So I'll just get that shared into the chat. It's still a big week. We've got non-farm payroll at the end of the week, and that alone oftentimes is a really big event. So QRA, big earnings, non-farm payroll. The big earnings could finally kick us out of this range that we've been in. Mixed bag looking at what's going on around the world. The Dow and small caps basically flat. S&P down a little more than a quarter, and the Nasdaq down the most at a 0.5%. Europe up a quarter. I think everybody's just waiting on us. We're getting a lot of data today, and it's easy to just focus on the QRA and ignore everything else, but there's a lot of stuff going on today, including the president is going to speak today, which, I mean, he's out there a lot. So, his opportunity to influence markets on a daily basis is always looming present. Crude data today may give us an opportunity over there if we're not getting anywhere in the indexes. Maybe copper or gold, crude, something else. I think this Ukraine resource deal, if that gets signed today, that could be market moving. If you're in gold or oil, keep your eye on that headline. All right, so we're hanging out at the 0 gamma level. It's like we've mentioned, we've moved back close to a 0 gamma. If we're looking at the spot gamma index, it's sitting at 0.28. That's basically flat. It goes from a -4 to a +4. So when we're sitting really close to 0, we're basically in the middle. So we're not going to get a lot of influence from VIX other than swag levels. We managed to get through the 10-week yesterday afternoon, but we weren't able to keep it. Now we're back down below it. The 10-week is this cyan line here, 55.76. See it. And so far this morning, we're still holding above the 3-period daily moving average. It's a white line down here. It seems that put wall has rolled down some. Let's check that. They usually have it in the founder's note. No, they don't. I'll have to go check. But it does seem lower. We could just scroll back to yesterday's post and see what the put wall was, tell if it's lower or not. It matters from the perspective of why'd they roll the put wall down. Generally, they would do that if they're making room, right? Start putting in some orders to the downside, building out a new location. There we go. Put wall on the ES 5225. No, it's still in the same spot. That's where it was yesterday. All right. So on the daily, we're getting a 1020 cross, and we're holding right underneath the 50-period daily moving average. We are outside of this box that we've been discussing, and we're starting to form a bit of a pinch pattern where we're trapping price between two moving averages. Like we talked about before, we can't stay here. And we were building out an IX10 until we closed outside of the range yesterday. But we're still tightly wound, even if we're no longer in an IX10 pattern. This is still highly compressed. It can't stay here. It's going to leave. Got to get out of the box. Japan's got holidays and they were closed. It's a really big holiday, so they're back. They're open now, but a lot of the traders aren't there. The easiest way to think about it is if we have a short week here in the US, say on Thanksgiving or on the 4th of July, it's a short week, holiday week, and a lot of traders, they just don't come back for that week, right? They're just gone for the whole week. So this might tie into why we've been light on the volume this week as well. That pretty much says it right here. Tight range, got to get out of the box. We haven't hit our ADR in days. I'm sure there's a count to it to where we could keep a score of how many days we've gone without hitting the ADR. Statistically speaking, we're going to get around to it sooner or later. At least we got our target in mind. When we do finally break the range, it'll be the yellow line. We've been compressed enough now that when we finally go, I think we're going to get a full ADR in a single direction, and that's what the yellow line represents. At this point, we're down a minuscule amount, 0.25%, so we're closer to the lower one, but there's no edge in that. To hit either side this one this week, we'd have to get an inside week breakout at this point. Today's floor pivot is higher than yesterday's. That's bullish. Price opened above it, and that's also bullish. The channel's a little wider today than it was yesterday. A wider channel implies that if we break out, the breakout doesn't stick. we are back inside of yesterday's range. So to get a breakout, we'd have to run up and break yesterday's high, or we'd have to fall all the way down and break yesterday's low, and then continue to move from there. And this wider channel says that's unlikely today. Now, these channels, they don't move price. They don't make price do anything. And they can't read headlines, and they don't anticipate economic events. So this might say, yeah, I don't think price is going to break out. And even if it does, it likely doesn't stick and it comes back in. But we could get a headline that knocks us, up to 57.50 by the end of the day. And it wouldn't have anything to do with that channel or that floor pivot at all. We got a pretty good distribution built on the week. 55, 58. It's not perfectly in the middle, but it's forming up around the center of the week. We're still holding above it. If we do break it, we'll focus on last week's point of control, which is 5,500 big round options level. And it's basically the low of the week. We've already been down there this week. That's our range right now, 5,600 to 5,500. And that's the box, GTFO. All right, we got the point of control shifted up here on the 10-day, 30-minute, something we've talked about over the last few days, that we expected to see this roll up with the TPO. We have them both. And it's likely that we won't see this point of control move into a new location anytime soon, unless we drop back down to 55 and build out this lower level. That's the only one that's close enough right now that I could think that we could build out, is at 55. If we got a little more extreme than that, we could drop down into 54.50 and build that one out. But that would be a bigger drop, right? And then, of course, things could get really ugly. We got this zone down here, 53.32 cog line. It's the value area low of the 10-day range. Got a new VPOC from yesterday. So a break today to the upside, we're going to have to get through that. And think about how much time we spent there yesterday afternoon just building it out. It was sloppy, choppy. I know I made more than one comment about us holding in that range yesterday. We really put in a lot of volume up there, a lot of work. So now that's a structure that we have to work through if we're going to try to break out of yesterday's high. We've got to get through that 55.90 level. 55.92 is a cog line, so it's close enough. It's like a front run on a cog line. And for the week, since we haven't gone anywhere and we haven't done anything, we're still hanging out really close to where we closed on Friday. That's the gray line. It's Friday's close. We're still just tripping over our own feet, doing nothing, waiting on data. We're going to know if it's QRA that we're waiting on, because we'll really start to get some moves after 8:30 if that's the one that we're waiting on. We're 1.5% above the 10-day. Not extreme. It's not overbought. We haven't moved too far, too fast. This doesn't owe us any sort of mean reversion, and we're not outstretched in any way. This is good. This is a good level to be at. We wouldn't want to get, say, 2.5 or into 3. That'd be a bit too much. But 1.5, that's just a good level to be at. 1.5% above the 10-day. For the 10-week, we were crossing back and forth through it right now. It's not going to be supportive, right? It's not support or resistance at this point. It's just this level that we're jumping around back and forth. And in fact, it'll start to act a little bit like a magnet, that we can hover around it and build out some structure here unless we get some economic data that pushes us away from it. One of the things that it's a little surprised at this morning is that we don't have a market maker move. Now, knowing this week was a sideways week, that was my base case argument. It has been all week. That's been playing out. And the big piece is the 8:30 QRA. But why are they not hedging if that's the big piece? Now, it could be, that they're have no need of hedging. And a lot of analysts have been pointing out there hasn't been a lot of hedging being built because you don't have to hedge when you're short, right? If you think the market's going to go down more and that's your concern and you're already short, you don't have to worry about a hedge unless you're worried about right side tail risk, right? The market popping up against you, and then you got to cover your shorts. It's possible, like I've mentioned before with QRA, if they just keep the status quo, if they don't make significant changes, then QRA doesn't have significant impact. That makes perfect sense, right? They didn't change anything. The market doesn't like surprises. And so if we're going to have what we already have been having, then there's no worries, no concern, no fears. And it's just carry on with the status quo. No reason to hedge. Nothing to fear. Which is the read we're starting to get when I look up here and I don't see that we're hedging this morning. So what you do want to be watching for is this afternoon. If this isn't what they are concerned about, what's left on the table? Well, we've got the earnings this week, and then we've got non-farm payrolls at the end of the week. I don't think they would have been worried about non-farm payrolls all week. They wouldn't have been stressing on it from Monday until Friday. So watch for that market maker move to pop up. It's likely going to help indicate what it is that they are worried about. And I mean, we do have ISM manufacturing too, but I just don't see that one as big as earnings and non-farm payrolls. All right, looking at what's down this morning, we do got some movers. Energy, technology, the Mag 7, metals and mining, uranium, bonds, precious metals, miners. And looking at what's up, China, the VIX. Yeah, China and the VIX. Wow. Long list there. Yeah, there's a lot of data coming out this morning. So EEM is also China, which it's galling to say that every time. China still has the earmark as an emerging market. Come on. It does not deserve that and all the benefits that go with having that label as an emerging market. But whatever. FXI, KWeb, EEM, all pointed in the same direction. They all represent the same thing. Then we got pot stocks, bonds. Actually, they're not even up enough, right? So we need more out of those. And as I mentioned, keep your eye on the Ukraine headlines because it's very likely going to whack gold and crude if they sign this minerals agreement today. All right, so the bias right now this morning is to the downside. We've got more stocks leaning down than up, more sectors that are down than up. And when we look at the sectors that we do have, like or that we do need, like chips and Mag 7, consumer discretionary, it's negative. So unless we get some market breadth that turns things around, sideways to bearish is the bias today. And of course, headlines can change that, but we got 29% of the NASDAQ down at least 0.5%. And 19% of the S&P down at least 0.5%. That's not very much. It's not overly negative, but a lot of times it's not how many names you have that are negative, but what names you have that are negative. And the Mag 7 are big enough and strong enough to move the market to the downside all on their own. Yesterday we had it pretty good. All of our events were in the first part of the day, so that by the time we were done with lunch, we pretty much were done with all of the surprises. Not today. We're going to have things going on all the way through the day today. All the way up into the close and then after the close. So there's no reprieve today. It's going to be hitting us all day long. Careful with that if you're running 0-day trades on a day that runs like this. All right, guys. So that's what I've got. Watch the news. Keep your eye on the headlines. We got to get out of this box. And until we do, it's just fake breakouts and fast failures. And we come back in and we hold the line and we're waiting on data. This is what we have, right? And it has been trending higher. You can use the R line. You can see that if we snap that R line on there, right? It doesn't matter where I put my mouse. The line just goes where it's supposed to. That's the direction of the grind. We are grinding higher as we're waiting on this data. But we can't stay here. So be careful, be safe, get out of the box.